Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the reasoning behind the moves today so that we can better understand tomorrow. And today we're taking a look at crude oil, our old friend crude oil. We had a really strong run higher at the end of the day yesterday, pushing all the way up into a new high. Literally from 12:30 until 2:30 when the market closed in RTH, we had the move from the low of the day to the high of the day. All in one shot, right? So a massive amount of bullishness that came into the market, trying to drive the market up. Every time the sellers tried coming in, it was nothing more than a trap. They got trapped there, they got trapped there, they got trapped on every single attempt by the sellers. And given that this move up was so strong, there are likely a lot of buyers that maybe missed this run higher, especially given how choppy and sloppy it was in here. They weren't really given a reliable way in until all the way over here. So there's going to be a lot of buyers that are coming into today seeing a gap down on the open as a potential opportunity to start buying straight into it, looking at it as though it's a pullback, right? They want to buy a pullback on the big move up, get the pullback, and then come back and retest those highs, and then maybe even go for an ABCD leg higher. We get a nice, beautiful little pullback to the moving average. We find a bunch of exhaustion down here. Sellers are running out of steam, all of the wick on the top. You'll notice the buyers are trying to push up and the sellers are taking over, but the caveat to that, the sellers aren't gaining any ground. So even though they are attempting to defend the highs, the big clue here is that the sellers are not getting any follow through. Now, the one problem that we talked about a lot today in the room is that the buy side doesn't look that great either. Unless you're just slapping the market button and getting in, there's not really a good, reliable way to get into this until, we get at least a halfway decent looking candle, all the wick on the highs, inside candle with all the wick at the highs. They finally break out through the top, but all the wick at the highs, right? So there's not really a good way into the long unless you're just blind buying into it. So unfortunately, that makes it so that either you're in aggressively or you miss the move, right? And that happens in trading. Welcome to the life of a trader. So we push back up to the highs, we fail through the highs, and we start finding a boatload of resistance all the way back down, and we get this massive bearish move right back down again. Now, this huge bearishness, this is the biggest bear candle of the entire day in an uptrend, right? Something is obviously wrong here with the buyers, and as if all of the wicks on the top weren't really a clue, the buy side seems to have given up here. The buyers will try to counteract this move by buying into it, and they can't even trigger long before turning back down again. They give it another shot, right? They try it again, and that one turns completely back down as well. So massive failures from the buyers, which is why there is a sell arrow here and here. Those are beautiful areas to drive these buyers out of the market and likely take their stops out for a stop run lower. Now, their stops may be down here at the low. They may be underneath that little minor swing low that formed there. But either way, we know that there are a lot of buyers in the market, and they're probably going to get stuck. And we're looking to drive them out of the move with these two candles here. Beautiful initiation of the bears, and then the follow through of the bears. We push down and hammer through the areas of support, and guess where we land on? That wonderful $50 a barrel area that we are constantly fighting over. But when the buyers show up, after this amount of bearishness, you're so likely to get another leg to the move that as soon as it popped higher, the sellers immediately smacked it right back down again, allowing for another sell to push the market down and complete the objective. Once they completed the objective, we found immediate buy support, but again, this is still a very strong downtrend. Now we're looking for the sellers to want to continue the move down, but at a better price. They don't want to sell down here anymore because the move's done. They want to sell at a better price so that they can get more room for the trade to work out for a larger target. We get a pullback all the way back up into where we had value before. The buyers found a bounce right here, likely area where you're going to find selling pressure again. They sold it there, they bought it here. They're probably going to sell it here as well. We get a huge bull attempted breakout, no follow through at all, directly off of the resistance we talked about in the blog, and smacked it right back down again for another beautiful shorting opportunity to take the market back to the lows. So just a phenomenal example of the back and forth battle that you can sometimes see in these markets of ours. And crude oil is one that when it picks a direction on these battles, it's usually pretty swift to take out the wrong side. Now, along with that, if you watched the pattern tutorial video in the Market Mastery series, we also had a beautiful little pennant pattern there for you pattern traders. So pretty much a mixed bag, but all of them pointing to nice moves. So that's going to do it for this one. Hopefully you found it interesting and you learned something, and we'll see you next time.